Hi, I'm Max Keiser. This is the Keiser Report. Max and Stacy are in Mexico City, part of our winter southern sojourn, heading to the promised land, El Salvador, with the Bitcoin standard, the hope of the world. But we're in Mexico City. Things are happening. Stacy, tell us more.
Right, Max. So while we've been traveling here, what I noticed was that there was an inflation propaganda. You know, Keiser Report was the first of the global financial news programs. Unlike Bloomberg, unlike Wall Street Journal, unlike CNBC, we warned you about inflation coming and the mindset setting in. Well, over the past week or two, we've seen an extraordinary amount of what shall we call it, propaganda about how great inflation is supposed to be. We already covered that one from a few weeks ago, whereby they were saying, inflation is good for the poor. Well, let's start with Paul Krugman, that guy, the Nobel economist, they call him, that he's at the New York Times, and this is what he tweeted. Aside from priorities, is this even true? He was responding to an article saying inflation is bad for the poor. Is there any good reason to believe that inflation hits low-income households especially hard? And then he followed it up with a second tweet. Inflation redistributes from creditors to debtors, not exactly a burden on the bottom half of the income distribution.
That's so sad because he's telling people that can least afford to go into debt, to go into as much debt as possible. It plays into my idea about interest rate apartheid. Obviously, Paul Krugman and his friends who run the New York Times, they can borrow money at 0% and never have to pay it back. But for everybody else, they're borrowing money at 18% on a credit card or 2,500% on a payday loan. And of course, when they can't pay it back, the debt collectors call them. They become impoverished and homeless. And so he's no better than the clerk, right, who was the villain of apartheid in South Africa during the 1980s. Paul Krugman is the clerk of this cycle of inflation. It's shameful, really, but he's a guy who is not an economist. He's just a paid mouthpiece for the absolute worst financial terrorists in America. But that's his job, and he has no shame.
Well, let's also talk about the fact that everything from the Arab Spring to the Haitian riots and stuff like that, they're caused by inflation and food prices, right? That's what causes it. Those poor people do not seem happy. But even in the U.S., okay, with access to debt by everyone, who has the most debt? Paul Krugman. Well, the government that you're doing some work for Biden there, the Biden administration, and the corporations. There's never been so much corporate debt and stock buybacks. But first, of course, the funniest, most viral tweet of them all while we were traveling here was from Joe Biden himself, where he tweeted, "The United States pays its debts when they are due. That's why today I signed a bill to fast track the process to raise our debt limit."
Right. Well, this is what happens when you elect a senile man to become president. He talks on TV in words that you would expect at an assisted living facility. And you would wheel him back to his room, give him some oatmeal, and stick a tube in his butt and hope he doesn't crap all over the floor. That's it. That's the only thing you can hope from Joe Biden. The words coming out of his mouth are so freaking stupid and so cognitive dissonant that, if he were again, in a hospital, they would be talking about end-of-life solutions, hospice care. That's how stupid and ridiculous this is.
Well, the fact is that you can't pay off debt with more debt. You're not paying off your debt. You're still defaulting. The U.S. defaulted in 1971, August of 1971. We covered that here on Keiser Report. The 50th anniversary just passed. Joe Biden first came into power during that time when he first entered Congress at that time in 1971, or was it the Senate? Nevertheless, he's been in power for 50 years as the U.S. dollar has declined. He knows that rolling over this debt over and over and over until we've hit zero and now negative real rates, well, that's not actually paying off your debt. And there were many, many funny memes, but we're not going to talk about that at the moment because I want to get into the fact that here Paul Krugman was saying that the bottom 99%, the bottom 99.5%, that they benefit somehow from inflation because inflation, inflates away the debt. that you have? Well, right now, the stock buybacks, another story that Max and I have been covering quite rationally and quite interestingly and calmly over the past few years, is that stock buybacks have been hollowing out the economy, hollowing out industry, hollowing out corporations by swapping the productive assets and the assets, full stop, and swapping them with debt. So this past quarter, the third quarter of 2021, we saw a total of $234 billion in stock buybacks. Running at an annual rate, that's $1 trillion. So to put the magnitude of the stock buybacks in perspective, this annualizes to $1 trillion plus per year, or would be about 2.5% of the market cap of the S&P 500.
Right. So stock buybacks hide the fact that these companies are losing money. They report increases in earnings, but that's due to the accounting fraud of stock buybacks that shrinks the float of the stock and makes it look like, oh, they're making money. If you were to strip out the stock buybacks, the average American company would be losing a lot of money, and the average price earnings multiple for stocks on the S&P 500 would be not only at all-time highs, but 2 times all-time highs. We're talking 45, 50 times earnings, which is to say they're completely trading on air. Paul Krugman, just to touch back on that, he would say that inflation is also good for poor people because their wages are going up as well. But Paul Krugman fails to mention that at no point statistically have wages gone up as much or faster than inflation. So once again, Paul Krugman, Nobel Prize-winning economist, cannot add 2 plus 2 and get 4. For him, 2 plus 2 is not 4. The wages are going up a certain percentage. Inflation is going up at a greater percentage. That's a net loss. I mean, this guy is not too smart.
Right. Well, in that photo that accompanies that tweet I just read, you see Hertz in there. And Hertz, of course, went bankrupt in 2020 until the Robinhood day traders rescued it. And they are engaged in a huge stock buyback now, less than 2 years after they nearly went bankrupt. Max, when you worked on Wall Street, this sort of thing never happened. But also, we just discussed that the president had said, okay, I'm here to sign into law that we're raising the debt limit because we always pay our debts. I mean, this is the same sort of thing. It's debt rollover all the way down. Everywhere you look, it's plunder. It's the private equity model of just swapping debt for a bankrupt entity. And you keep on loading up an already bankrupt entity with more and more debt until you just crush the company. And that's like loads of big companies that survived hundreds of years in America got crushed by the private equity model, where they had a whole bunch of debt loaded up on them and then it all collapsed.
Right. It should be noted that we also see the US dollar going up at the same time and other currencies around the world falling and entering into a hyperinflationary collapse. That's by design. The US, by supporting bankrupt companies like Hertz and by supporting stock buybacks and crooks like Warren Buffett, they are driving the world to global conflict, which is unconscionable. Because just because Bill Gates wants to make a few more $1 million, we're going to go to war with the rest of the world. It's so sad, but this is America today.
I thought you were going to do that song of the This is America. We can't sing it because, of course, everything is copyrighted. That's the only thing that's still a productive asset, you could say, in the United States. But, the other thing, this inflation and inflation propaganda happened after it was reported by Oliver Darcy, who I guess he works at CNN or knows people who works at CNN. And what he was saying is that CNN executives and reporters were meeting with the White House, meeting with Jen Psaki, and they all decided that we need to have better news, economic news. It needs to be presented like a cheerful, happy, view on the economy. And then sure enough, you did see a whole bunch of hey, everything is great. Because Psaki says that it's when she was questioned in a press conference about the ratings numbers for Biden collapsing, she said, well, people have the wrong perception about inflation. Like they're not reading enough Paul Krugman. Of course, because Paul Krugman is also, thankfully, like behind a paywall. So nobody can read that stuff. Thank God. But, in terms of the inflation and inflation propaganda, here is Don Lemon of CNN praises Biden administration's work on gas prices. So just like that famous North Korean sort of presenter who's like, the mighty dear leader has shown the world that we are the best. We are the most powerful. We have the weapons to destroy the world. Well, that's what he's suggesting here.
Right. The CNN is state-funded, state-controlled media. And YouTube, if we were honest, they would say that under every of their YouTube videos. State-sponsored, state-funded, state-controlled media. CNN, NBC, ABC, Bloomberg, they're all state-funded, state-controlled. And it's a shame that Psaki has had to go on air and basically cloak herself in a veil of shame, pushing this propaganda so shamelessly.
I would say that it is 0% state funded. What it is 100% fiat funded. It is 100% oligarch funded. It is 100% corporate funded. And the corporate people who are the cantillionaires who benefit from the money printing, they want you to have this sort of money printing policy continue. They want you to support it. These people are not acting as a government by and for the people. This is not what they're pushing. They're not pushing that. They're pushing the interest of military-industrial complex, of intelligence and surveillance industrial complex, of the big tech complexes. They're pushing the interests of those people. It is, in fact, corporate funded in a way that they're not being quite honest about the benefits to the elite of money printing. The money printing benefits the elites. This is the name of the program, which I said is Inflation in Inflation Propaganda. So when you're propagandizing, who are you propagandizing on behalf of? Max and I on here on the Keiser Report have covered the cantillionaire class. The cantillionaires are the ones who benefit, and the cantillionaires want a money printing system to continue because they do better than everybody else. And that's what we're seeing. I don't know what you want to call it. You can call it state funded. You can call it corporate funded. You can call it whatever you want, but I believe it's cantillionaire funded.
Right, exactly. If it were government funded, that's not necessarily a good thing or a bad thing. But if you say it's corporate funded, that is 100% a bad thing because that's called fascism. And fascism, I think, we fought a war over that. I don't remember because it was erased from Google and it's not accessible anymore. Hey, we're going to take a break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to John Rubino of dollarcollapse.com. John, welcome back.
Hey, Max. Good to be back.
All right, I'm going to mention 6 things to you. Tell me where we are in the cycle. Here are the 6 things. Inflation, stagflation, disinflation, deflation, shrinkflation, and hyperinflation. Where are we in that cycle, John?
Well, we've got several of those going at the same time, but I guess I would have to say just inflation right now, although stagflation and shrinkflation are in there somewhere too. But it's important to note that we've been in an inflationary economy for a lot of years now. It's just that the inflation has been narrowly focused in stocks, bonds, and real estate. Those things have been going up wildly, and those things were seen as good from the point of view of most people and from the government because they don't count that as regular inflation. So nobody thought that the dollar was losing value when actually it was plunging against stocks, bonds, and real estate. Well, now the inflation is starting to become more broad-based, and regular people are starting to notice that the cost of living is going up, and that's what the big change is right now. All of a sudden, it's real for more people, and for instance, just to give you some examples of the last year or two, used car prices are up 40% in the last couple of years. Corn is up 26% this year. Coal is up 61%. And what was it? Natural gas, I think, is up 30%, which kind of raises the question, how do we only have 6% inflation if so many things are up in the mid to high double digits. And that I think will sort out eventually, but it could be that inflation is actually quite a bit higher even than what we think it is. Even though what we think it is kind of at a crisis level right now. The Fed would normally raise interest rates at 3% inflation because their target is normally 2%, but now we're at 6%. And it's still not clear what's going to happen. So this is a big, both real and psychological change in the market that I think makes 2022 a really interesting year.
Yeah, let's talk about deflation for a second, because up until maybe 6 months ago, the central banks were talking about they need to fight deflation and they need to keep interest rates low. And they're not sure if they're going to hit that 2% inflation target. But against a backdrop of a very simple fact, people's purchasing power for their fiat money has gone down for 50 years. So another way to measure inflation is in purchasing power. And at no time has purchasing power gone up in 50 years. At no time in the last 50 years are people reporting on the fact that, oh gosh, the dollars in my wallet are buying so much more at the grocery store. That's never happened. How did they get away with calling inflation, which is what we've had for 50 years in one way or another? How did they get away with calling it inflation? Isn't that just an outright lie?
Well, they've gotten away with it for a couple of reasons. One is because, like I said, the real price increases were narrowly focused in things people don't normally think of as inflation. And bread and milk and used cars, they didn't go up that much. So a 1 or 2% increase is something that people don't notice, and that's what we had in a lot of the basics for a long time. But we were in an inflationary period. Like you said, the dollar has lost purchasing power for 50 years, and it's lost a dramatic amount of purchasing power versus financial assets. So now that it's spreading out into other things, that's a whole different thing. But it should be said that all the debt that we've taken on is profoundly deflationary. In other words, we've accumulated so much bad paper that the system really wants to tip over into a 1930s style depression, which is what the Fed is leaning against by creating all this new money. The M2 money supply is up 30% in the last year. And if I'm understanding the chart the Fed puts out about N1, which is a narrowly focused money supply gauge, it's gone from $4 trillion to $20 trillion in 1 year. So that's a sign that those guys behind the scenes are panicking. They know we will tip over into a deflationary depression unless they inflate their way out. But the numbers that are required to do that, to hold off all the bad paper blowing up, those numbers are so immense that you get all kinds of inflationary effects unless you get it just right. They didn't get it just right. They overprinted in the last year. And that's why we've got accelerating inflation right now. So, this is kind of the beginning of the end game in the story that's been told by the sound money community and the gold bugs for such a long time. Eventually there would be a boom and a bust, in which the bust was so outrageously huge that the government would have to bail out everybody in sight. And the effects of them bailing out everybody in sight would be profoundly deflationary or destabilizing and inflationary. And that's kind of what we got now. So, the Fed is in a box right now, and they know it. If they allow the current inflation rate to continue, then people will kind of finally clue into the fact that we're in an inflationary environment, and they'll start acting accordingly. They'll panic buy everything in sight. Everything they were going to have to buy in the next 2 years, they buy right now, which pushes up the prices even further, which causes more panic buying, et cetera, until you get a kind of a currency debt spiral. They call that the crack up boom in the Austrian School of Economics. But if they don't do it, if they try to lean against this inflation and raise interest rates back to normal levels, it blows up the financial system. And that's kind of their only two choices. So they're sweating right now because I think they understand that those are their choices and they have to pick one. And that's why they seem like they're dithering, because the Fed honestly doesn't know which one to choose, because the effects of making a mistake either way are horrendous. And they don't want to be the Herbert Hoover of the next generation. They don't want to be the Weimar Germany of the next generation, but those are kind of their only two choices. So, if they weren't such idiots, you could sympathize with them.
Yeah, but wait a second here. So you're saying, oh, the debt is quite high and the debt's getting bigger. But the word debt, there's a pretty standard and irrefutable definition of debt. It's a piece of paper that has a maturity. And at maturity, if you don't pay the debt, you default on that debt. Now, the U.S. hasn't paid its debt in 50 years, John. Why do we even call it debt? Debt, as the U.S. engages in their debt financing of their economy, is money printing. It's not debt. Let's just erase that. That's part of the problem that we have here, is that people keep on calling it debt. It's not debt. It's just money printing. If it was debt, then there would have been a default, right? Biden just raised the, quote, debt ceiling. There is no debt ceiling, John. It's perpetual money printing. That's why that's why there's inflation. That's never been deflation. I mean, again, I get to my question. Here you have government officials staring into the camera and lying directly to people in a treasonous manner, John.
Well, I will accept your definition of what they're doing as treasonous. That's very reasonable, and they should be dealt with as somebody who's committing treason. And we are full on MMT. Like you said, we're doing monetary or modern monetary theory right now without telling anybody about it, where we basically finance the world's major governments by having the central banks just print money and just toss it out into the banking system. But in the process, we've conned the private sectors of most of the developed world and a big part of the developing world into borrowing a huge amount of money that is debt and that has to be paid back. Like, take China as an example. They've run the mother of all financial bubbles over there. And in the process, they've convinced the private sector to go all in on real estate. About 70% of Chinese household assets are now connected to real estate in one way or another, and the real estate sector is imploding. That is hugely deflationary. But you're right that more than likely what happens is that the government just steps in and buys all that. They print enough yuan to bail out this gigantic real estate sector, and in the process, bail out all the private sector individuals who have invested in the real estate sector. So that's how you get the hyperinflation that blows up the currencies of the world. And I think that's still the most likely outcome. I'm saying that if they don't intervene in a massive way, you get a 1930s style debt-driven depression because the private sector blows up.
Right. No, I don't think that's in the cards, John. I don't think we're not going to have a 1930s debt deflationary depression because we're no longer on the gold standard. There's no anchoring of the economy to anything physical or anything that is real. It's completely phantasmagorical. And they've committed themselves to print money into death. So literally, the Chairman Powell is like a goldfish. He'll eat himself to death. They will debt themselves to death. Again, it's tyranny. And as far as China goes, America is willfully stepping into a war with China by putting China into an untenable position. And these debts and these obligations are completely failing. And this always leads to world war. This always leads to war, John. So that's another quiver in the case against this current administration for tyranny. Not only are they printing the money to death, but they're willfully bringing us into a world war because they're A, stupid, B, corrupt, and C, greedy. That's what we got. There's a remedy, for this. And every day we wait and to exercise our remedy, it's the shame on us, John. Shame on us. It's not the policymakers. They're the ones getting rich off the stealing of all this money. It's a shame is on us, John, for not exercising our constitutional remedy in this case, John.
Yes, I agree with everything you just said there, Max. The longer we wait to rebel against the current system, in other words, the system where there's an aristocracy siphoning off more and more money from the 99%, the worse the eventual consequences will be. And, people are starting barely to clue into this, but I think we're a long way from people completely figuring out what's happening because, the pandemic got in the way of a lot of this, which I don't know, that's a subject for a whole show right there. But suffice it to say that it gave the aristocracy another couple of years in which to steal from everybody else. Now, the question becomes, how long can this go on? How long can the financial system survive with money supply growth at double-digit rates and private sector debt soaring and stocks reaching valuation levels that are absolutely unsupportable in anything other than a wildly inflationary environment. I have learned not to make year ahead predictions, but it does feel like 2022 is going to be a year when a lot of this stuff comes to a head, when a lot of people figure it out and start acting accordingly. So we've got some very interesting times ahead of us. And then the question becomes, as individuals, how do we protect ourselves? So then we're into the investment thesis part of this.
We'll do the investment thesis in part 2. For now, thanks for being on Keiser Report.
Thanks, Max.
Okay, that's going to do it for this edition on the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, John Rubino. Until next time, bye, y'all.